Hey everyone, let's break down Google stock in a simple way to help you decide if it's worth your time and money. Imagine a company that's all about making the world's information easy to find and use. That's Alphabet, the company behind Google. They own Google and they are into all sort of tech stuff like search engine, videos on YouTube, cloud services for storing data, even homes, gadgets. Their main way of making money? You guessed it right, ads. Think about those targeted ads you see on Google searches or on YouTube videos. That's their big earner. Plus they sell cloud spaces using Google Cloud, hardware like Pixel phones, and subscriptions. Google Search owns 90% of the searches worldwide. Android runs the most smartphones and they are in top 3 in cloud services among AWS by Amazon and Azure by Microsoft. Lately, in 2024, they pulled in $350 billion in total money, coming in with the big jumps in search and ads up to 13% to $198 billion. YouTube ads around 32 to 36 billion, over 2.5 billion users monthly, and cloud hitting around 43 billion in revenue. They are pouring money into AI to keep things growing. Right now, the stock's got a solid score of 87 out of 100 because of their strong growth, profits, good vibes coming from the experts, though there are some legal bumps to watch out for. Market move is positive based on the analyst view, price trends, and recent earnings that showed solid growth. The stock's hanging around $250, up from a low of $143, and going up strong. Stick around as we unpack if this is a buy for you. Alright, let's get real number about good and bad side of putting your money into Google. On a plus side, they're seeing strong growth in the money coming in like double digits across ads and cloud stuff. The profits are solid and getting better, with more money left over after cost. They're leader in online ads, their cloud business is growing fast with mixed in AI. Most experts say it's a buy, with the price goal higher than where it is now, hinting at a room to go up. There is a bit worry in the market right now, which might mean ups and downs. They had a legal trouble leading up to the big payments that could cut profits. Plus, stocks priced high compared to some measures, meaning people expect them to be crushing it. If they don't, it could hurt. What do the pros think? We have got input from 65 analysts on Google, and the overall call is to buy. Their average price is $240, with the highs up to $285, lows up to $185. Medians $238, so that's about 20% up from the current level if it hits. Earning per share guesses average around 9.95 to 9.98. Breaking it down, 42 says strong buy, 12 says buy, and 11 says hold. 0 sells and underperforms. Compared to the industry, it's also a buy rating. Volatility above average, meaning it can swing more than usual, but last update from the fresh mid-September 2025. It's marked as buy with upward arrow and volatility gets orange flag for being a bit wild. Let's talk about how Google stacks up in the market and if it's priced right. On the valuation, it's scoring about 5 out of 6. Pretty strong, meaning it's not a super cheap, but justified by its performance. Earning gets 4 out of 6, showing solid profit but room for more. Growth is 6 out of 6, steady but not explosive right now. Performance is 4 out of 6, which means good returns lately. Health is 4 out of 6, meaning company is in the good shape financially without too much debt and issues. Let's see how Google measures up to broader software and IT industry. First off, their gross margin is 58.2%, which is solid but bit below industry average 67.3%. This means they keep a good chunk of sales after basic cost, but others in the industry squeezing out a bit more. However, their operating margin is stand out around 32.1%, way above industry 11.6%, showing they are super efficient at turning sales into profit after all expenses. Net margins also strong at 29.4 compared to the industry 10%, meaning they pocket more profit per dollar of sales than most peers. Return on equity is 31.6, slightly below the industry 35.1, so they are doing well, but not quite leading in using shareholder money for returns. Where they shine is debt. Their debt to equity ratio is only 4.17, much lower than industry's 33.1, showing they rely way less on borrowing and are improving faster than others. Their current ratio, which checks if they can pay short-term bills, is 1.84 versus industry 1.38. So if they got more cash flexibility. On pricing, Google's price to earning ratio is 23, a steal compared to industry's 38, suggesting the stock's cheaper relative to its earning. Price to book ratio is 7.3, half the industry's 14.3, meaning it's valued lower compared to its assets. Overall, Google's running a leaner, more profitable than industry average, with a cheaper stock price for what you get, a strong case for investors. Every company's got a rival breathing down their neck. For Google, it's no different. Main competitors include Meta, Microsoft with Bing, Amazon, Apple, Netflix, Nvidia, Baidu, Yahoo, Yandex, Facebook, Snapchat, Twitter. It's a big list. But Google's advantages are huge. Over 61% market share in search, internet services, and top AI tech like BERT, DeepMind, a mix of businesses in health, more, and strong ads platform, a massive user base all tied together. Their position as leader in search, AI, and digital stuff. Diving into the numbers that show how healthy Google is financially. We have got 9 key profitability measures, all trending up strong over 15 years. Gross margin is 58, latest in 2024, meaning they keep a good chunk after the basic cost. Operating margin is 32, EBIT and EBITDA is 36.48, pre-tax 34.23, and net profit of 28%, all showing they're efficient at turning sales into profit. Return on equity is 30.80, on assets 22.24. On an investment, it's 29.80. These mean they're making good money from what they own and invest. Everything's on a strong upward path. No big dips, which is a green light for stability. Strength, weakness, opportunities, and threat for Google. Strength. There are bosses in search, ad, YouTube, Android browsers, a strong brand, big R&D spend, tons of patents, everything connects in a Google world. Mostly free to hook users. Weakness, too tight to add money. So if that slows, ouch. Lots of legal fights over patents, privacy, business practices, and taxes. Android split across versions, making it messy. Opportunities. Jump into streaming subscription, AI, machine learning, edge computing, wearable health tech. Grow cloud for health, finance, make more smart devices with Assistant, push hardware like phones and laptop, even open stores for better customer touch. Threat. Ad blockers everywhere, dropping ad click prices, government watches, new laws, privacy scares, hacks hurting trust, heavy competition in AI, cloud hardware overall strength ops look solid to outweigh the threat if they play smart. In summary, Alphabet is a financial powerhouse, boasting strong financial profitability, minimal debt, robust liquidity. With a stock price that looks undervalued compared to the industry, it's a compelling pick for an investor eyeing stability and growth for a long term.